Hello again, everyone, and welcome out to another market recap. This is Ankit from Currencies, and let's begin our coverage. New week, and let's see how things started off on a Monday, February the 13th. Hope everyone's doing well and had a good Super Bowl weekend. That was definitely exciting. So let's see if the markets are as exciting as the Super Bowl was. So looking at the market analysis today, it was a bit more on the quiet side, and there's a reason for that. The markets are waiting for the US CPI report tomorrow, and these CPI reports are always pivotal because these are the ones that can provide a very good charge and a catalyst to the markets one way or the other, especially when there's a surprise. If you look back in charts, back in November when we had that first drop in the inflation number, remember that caused a big move across the board. And these are the powerful moves that we can expect, especially when these numbers come out of nowhere. And again, if tomorrow that number takes up, we can expect a big move. If it takes down lower, we can also expect a big move. So usually we see a big move when there's an expected outcome. And if this has come more in line with expectation, we might see a moderate move, but still a good potential for looking for a possible trade. So looking at the markets today, the S&P market, S&P 500 was actually up. The World Stock Index was up. So we are seeing a little bit more positivity in the equity markets. While crypto was down, we have seen actually gold was down gold was down as well today. So I think gold was down 0.64%. And that's not a good sign for any sort of traders that are looking for metals and looking at the correlation between the dollar. Interestingly, gold is kind of taking a lead here in sort of relative weakness here. So we'll take a look at the charts for gold in a bit, but let's start with the equity markets. So the equity markets are, again, as we discussed last week in the currency room, it's more like a kangaroo style markets. You know, we are seeing a lot of back and forth and a lot of signals that we're getting, mixed signals here. You know, we've seen a breakout. We fell right below the range. Now we are back above the range. So it's really kind of keeping traders on the toes, especially regardless if you were on the bullish side or the bearish side. So I think there's a bit of a tug of war happening here, and eventually, if it breaks higher above this previous high, we can see a further continuation. If this breaks below this 20-day moving average, I can expect a little bit more weakness in the markets. Could tomorrow would be the day where we can see a catalyst? We can, absolutely. So tomorrow is where we'll be looking at the trades, and not only just tomorrow. I think that will really set the tone for the rest of the week as well for the markets and the US dollar. Now, looking at the crypto markets, actually, let's go back to the World Stock Index. I just want to highlight that we are seeing very similar price action. Price action is supported in this prior resistance, which is now the support. So we need to see this area to kind of give below in order to get that charge to the downside. So we kind of stuck in the middle here between the bullish and the bearish outcome here. Now, the crypto markets are showing a little bit more weakness. Look at that 20-day moving average kind of gave up, and now we're slowly going below and testing the 50-day moving average. So this would be the next sort of line in the sand here. And if it breaks below that, we can easily kind of get back in this previous range here. Remember, crypto is still not the best place to park your money, especially when the Fed is raising rates. Again, that's the thing. But right now, we are still in the same environment where we had a stellar jobs report, which really sparks more of the talks that the Fed has to actually continue hiking rates. So I think in this environment, I think the better outlook is really where we see these rates hold, or we see a continuation of those rate hikes. So we definitely see the markets kind of fighting that. But the cryptos are definitely giving up those gains that we've seen in early part of 2023. So let's take a look at the crypto performance here, percentage-wise, see where the big movement was. And if we take a look at the movements today, I mean, the Litecoin was the worst performer. Remember, Litecoin usually has been the best performer, but today it was the worst performer, followed by Ethereum. So there's definitely some sort of disparity between the Bitcoin and Bitcoin Cash, but overall, as a whole, in the crypto markets, everything was down today. On the other hand, take a look at the price action in the currency market. Remember, I always say anything above the 0.5% is a good move, or anything close to 1% is definitely gets into the better move environments. But I mean, take a look at that. The only currency that moved in that 1% range was the Japanese yen. The Japanese yen was down 1.17%, very interesting move. We'll be taking good charts and see what's really going on, but the yen definitely broke that support. It's been trading in this range bound condition for the most part of last month and so far this month. So we definitely need to see some sort of breakout one way or the other. We discussed that briefly in the currency room, and we looked at all the currencies and look at the trend scores. And trend scores are sitting, most of the currencies sitting at 0, which is again not a convincing outlook if you're trying to figure out which way something is heading. So we are taking advantage of the velocity, but as far as trying to commit to the moves, it's pretty unclear here where things wants to kind of head out. The Canadian dollar, which again had a very good day on Friday off the jobs report, did pull back a little bit today, but it was a very small, mild pullback. Same thing, dollar did well, but then had a mild pullback. So are these the bounces that we need to sell into? For example, currencies like Aussie dollar, or even Kiwi dollar. I think that's something that we have been discussing since last week, where I've been more selling those rallies and trying to buy those dips. But again, tomorrow's CPI number can be really the kind of the catalyst that we need in order to get a bit more of those moves to kind of develop further. Now, looking at the outlook for tomorrow, or for the outlook for the markets, I mean, even though we are above the 20 to 50, I think the outlook is really still at +1. We were at +2 while we were here. I don't mind changing it to +2 if we're trying to break out. But right now, I think the key here is that you have to be very cautiously bullish into the markets, especially with the news catalyst coming ahead. So that's due at 8:30 a.m. Eastern Standard Time, and all that focus is going to be in the US session tomorrow. So looking at the currency analysis, let's see where the velocity score is. And right now, most of the things are sitting at between -1 and a +1. Again, not so aggressive scores as far as the velocity goes. The big movement was really in the Japanese yen. So if you were pairing things like any sort of yen cross, like pound yen, Aussie yen, euro yen, or Kiwi yen, they all did sort of well. But then we have other currencies where, I was definitely more excited for the CAD going into this week. Again, seeing a very small pullback here, but that's the direction that I'm continuing to watch if the CAD can continues to a bit of a rally further as it's trying to break out of this range. Dollar, if you take a look at the dollar price action, is holding in. So I think at this point you can't really rule out and say maybe the short dollar looks the best, or the short the CAD looks the best. I think we're kind of stuck in the middle there, and it could go really either way tomorrow. So again, that's the focus, is to look at where the moves happen, and where we see a breakout, and where we start to see a better trending score in order to follow some of the directions. But other than that, continue to follow this velocity. One of the things that we'll be taking a look at in trend score is the yen, because I think yen will give us a bit more of a negative score. So let's just jump right into TradingView and take a look at the charts and see, okay, where can we find a more compelling trade? So let's just start with the yen basket, because yen basket, like I said, has been stuck within this range. But look at the daily chart. We actually have broken that range. So the question is it ready to be shorted further? We talk about it, that I think the yen still is a bit of a tough short, because we get these sort of rallies out of nowhere, and then some sell-offs out of nowhere. So again, that was a very typical range of price action where we just didn't have that consistency. But if this is a true break, the next level of support comes in right here, and there's a decent chance for making a further continuation in these yen crosses. So if I just take a look at the percentage change, that's about a 2.92%. Again, that's a good percentage, especially if you're trying to look at risk to reward ratio. This range that we have over here was 1.42%. So we definitely have a good risk to reward ratio on a continuation of this trade. If you look at the RSI, continues to drop, things actually look a little bit more negative than positive. So I think I do like the yen crosses here, but I won't be really pulling the trigger until tomorrow when we get the US CPI report. Another pair that I was definitely excited to kind of see a further continuation was dollar yen. But you see, dollar yen is still not broken out yet. If you remember back in November when we had that big jobs report, the CPI number, look at that move that we got at that time. We went from 146 down to 138. I mean, I'm not expecting a big move like that, but again, if there's any sort of potential here, and then sort of continuation to the upside, we get a good catalyst tomorrow. I think we can get a bit of an aggressive move to the upside. But right now, I don't have a confirmation yet, so watch out for this 133 area because that's where the resistance is sitting at. But again, if it does break out above, I think there's definitely more of this follow through to be had in this dollar yen. Now that takes me back to the dollar currency basket. As you can see, daily chart is sideways. I mean, we've seen a big breakthrough after breaking higher, and this is just consolidation. So I can't rule out the fact that, I mean, dollar can still rally higher. I mean, it's still sort of, a +1 to a 0. I rather want to see a breakout above or lower in order to get that confirmation. Until then, like I said, keep the powder dry and look for both case scenarios. What if the dollar is actually really strong tomorrow? What if the dollar is really weak tomorrow? And what would you pair that with? Now, Canadian dollar, I mean, look at that. This thing was a good looking currency on Friday, and I talked about that this has experienced a nice little breakout here. And now we're just testing that breakout, which is now the support. If it falls back further, we might just have a fake breakout here. If this holds this level, I think we can and try to rally up. There's definitely more chance for CAD to continue further. Again, CAD is definitely tied up a little bit to the US dollar as far as the performance goes. So keep an eye on both the dollar. If the dollar is good tomorrow, I would expect the CAD to kind of follow the suit. And again, if the dollar is weak tomorrow, that we might see the CAD kind of follow that suit as well. And again, in both case scenarios, you have to take a look at what would benefit the most or get hurt the most. And again, that would be the Aussie and the Kiwi. Right now, on a 4-hour chart, I mean, this is a messy looking chart. I mean, take a look at this range that we have for the month of February. Again, good movements if you look at back and forth. But if you're looking for, if you're a directional seeker, and this is not the price action that you want to be in, if you're a directional seeker, then you want to be in the price action, like what we have right here. Like that's what you want to see. But when you have this, a sideways price action, you got to be changing your outlook and changing your strategy to tackle that kind of price action. So tomorrow, Aussie USD will be the focus. I mean, look at this thing. It's stuck right here. I mean, the support is strong at about 68.76, 68.70 area. On the upper hand, we got the resistance at about 70 area. I mean, this 70 area is kind of a important area because that really what acted as a big support before. I mean, look at this, draw this little support line here. I mean, we are right at that, touching that area. So it's kind of stuck in the middle of those two areas. And like I said, at this point, it's very difficult to really pick a direction because we are right in the middle here. And we can actually go either way tomorrow when we get the US CPI numbers. So like I said, you have to be really prepared for both case scenario. What if the dollar is strong and what if the dollar is weak? And based on that, we'll be picking those trades. So do your homework. Make sure you're following relative strength weakness. Again, I'm not looking to be active tonight, but my focus will be tomorrow morning. So that's where I'll be looking for most activity. So dollar play will be the focus. And again, make sure you have proper position sizing and always paying attention to what's in play and trade less when you don't see much activity. So keep the powder dry. Always remember that. Thanks everyone for joining. Enjoy your rest of the evening. And again, get ready for the CPI tomorrow. Take care. Cheers.